Welcome to the inverted fair value gap. Let's go. All right, here we go. All right, looking at the chart right here, we're going to be learning about inverted fair value gaps and how I use them, okay? So inverted fair value gaps are a aggressive way to trade, okay? I have recognized that I am an aggressive trader, okay? I like that splash of thrill, okay? Anyway, so that's just me being real. But I'm gonna show you how I use them. Okay, so let's take a look right here. All right. So this is on a 3-minute chart. The one reason why I like this is it was created as, in my opinion, manipulation. This move right here was strictly manipulation. It pulls up, right? It inverts this fair value gap right here. Okay, but then here's the deal, right? We do this, we create this fair value gap, and then we start to invert it during a macro. Okay, to me, that's something I want to pay attention to. All right, now of course this did match a lot of my other bias. All right, but this is just about inverted fair value gaps. Whoa, come on, there we go. Okay, so now we've got our inverted fair value gap. So I'm already looking for shorts. Okay, I'm already past some of my top down analysis, and I am in the market today. I am looking for shorts, right? So actually, I would have been looking for a short right here. Okay, but what happened? We inverted that. Okay. So I was like, no. And this is actually a trade I took. Okay. So this is a trade that I actually lived out. All right. So this fair value gap got inverted. So I'm like, nope, not trading that one. Which was good for me because of the time frame. Okay. I love trading during the macros. All right. So what happened? We came in, we created, I'm just going to go ahead and move this fair value gap over. We created this new fair value gap. It was a bullish one. Okay. It was a bullish, and we came up and we start. What did we do? We inverted that fair value gap. We respected it once, respected it twice. Once we respected this a third time, that's when I became very interested. It was somewhere, give or take on these two candles, guys. I can't remember exactly. I could go look, but I'm too lazy for that. So I would have put this above the highs, and on, like, as you know, I usually shoot for a 2-to-1. All right. But on this day, if I'm not mistaken, this was quite a while ago. Let me look back. Yes, this low down here. Okay. So it was this low down here that I was targeting. All right. So it was actually the pretty much the bottom of this candle. It wicked a little bit below, but it was the bottom of this candle right here. I'll go ahead and mark it for us. So right there, shift, there we go. That was the actual target for me. Okay. This was the actual target. Now, when I hit a 2-to-1, I start taking profit. I just don't care. Okay, I secure, because there's many times it's like, yay, and it comes down to just, it just stops short and then just takes right back off, stops me out. So that's just me. Okay, that's a part of my plan. For some people, they like set the trade, they walk away, and they'll never look at it ever again. And it could come down 1 pip and then go straight back up and get stopped out. And they're like, hey, that's a part of my plan. And I'm like, dude, if that's a part of your plan and it works, go for it. All right. So because we inverted this fair value gap, I took this trade. All right. Now let's get the trade off the charts, because that's not what we're here to learn. I just wanted to give you a real time, or not real time, but real world scenario where it was used. Fair value gap. Okay. We have candle 1 come up, wicked right there. As you can see, there's the wick. So that's where I put the bottom of this box, and we blast off. Then the next candle, we come down, we touch. Okay. That is the fair value gap. Exactly. This box right here. This inefficiency in price is the fair value gap. Now, a lot of people probably were looking at the long this. Okay. The only problem was we were really in a bearish scenario. Okay. And we had to splice down. So that's why I was hunting shorts. And this is a very aggressive way to trade, but I like this one personally. It fits well with my trading style. Okay. And so once we came down and we inverted this, okay, we came below, we pushed through it. It's showing me that this bullish order flow has just been disrespected, and disrespected not just once, not just twice, 3 times. I don't count how many times it disrespects. I just start paying attention. Okay. If this candle had come down and wicked and then just like blasted off, obviously, I'm not even going to like consider this fair value gap. I'm going to stay away from it. Okay. But I entered the trade in one of these two candles right here, and it was good to go. All right. That was showing me that the bearish scenario was going to play out. So a inverted fair value gap, okay, is your fair value gap that has been disrespected. Okay. This bullish fair value gap, we had bearish order flow push through it, test, test, reject. Okay. Like I said, it doesn't have to test, test, reject. And honestly, if this candle was bearish and then this candle was bearish and it just went down, I would have seen this candle as a disrespect. Okay. If these candles weren't here and these were just all bearish, I would have seen the same thing. I would have taken the same trade. All right. So yeah, that is inverted fair value gaps. An easy concept, very powerful. You just need to recognize that it is an aggressive entry or aggressive entry confirmation, and you need to have this aligned with many other confirmations. I was already very bearish on the day. I was already hunting, so this was something I was looking for in specific. It went with my trade model. It fit everything, and then this is what I used to actually enter on the 3-minute chart. Okay? All right. See you in the Discord.